All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for December 1st, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 504. My name is David Kosmeter. I'm the creator of TimingResearch.com. You should be seeing my screen right now, but we'll switch off to the other panelists throughout the episode. And today I've arranged for Harry Boxer of thetechtrader.com to join us, as well as Alaina Nicole of investingbay.com and Michael Filighera of logicalsignals.com. And Jim, the option professor, is back to moderate, so I'm going to turn it over to him.
Okay. All right. Well, we're back from the holiday, and we got hit a little bit with selling early on, and then it stabilized quite a bit. But it was definitely a softer start to the week, particularly in things like Bitcoin. So we're going to find out what's going on, and we are within shouting distance of the end of the year, so we can talk a little bit about what you guys might be expecting. But we'll start out with the S&P 500, and basically we see it on our screen right there. And Harry, do you want to give a quick rundown on what you're thinking
Well,
on the
yeah,
S&P
so
right now? Yeah.
absolutely. Well, we've had a strong 5-day rally off the reversal from what was that day? November 21st, just before the holidays. We got down to 65.22,
Hmm.
and the high today was 68.43, so 320 points vertically, basically.
Yep.
And at lateral resistance, if you look at the last peak, it was
Hmm.
68, 69, 70 range. So we got just underneath that and pulled back. I suspected we would pull back for a day or two at least and from some consolidation. They usually get that after coming off a low like that. Question is, will they hold support, which right now to me is around 6750 and then 6,700. Below that, you got a problem all the way back to 65, 22, 40 range. I think the market has a good shot at fooling everybody and blowing on a year-end rally over 7,000 to 7,100. That's my
Hmm.
take.
Yeah. Now you were very clear that you thought that 65.50 neighborhood, nobody's going to pinch a quarter here, was the neighborhood where if it got underneath that substantially, that it was a game set match, and if it didn't, we get a substantial rally here that may end, and may not go up forever, but maybe a little bit over 7,000 or something. Are you still feeling a little bit like maybe a little bit over 7,000, but then it gets more dicey?
If it gets over 69.20, we could get to 71, 71.50 that zone. Because if you look at the rising channel off of the
Yeah.
April low,
Yeah.
draw your line across the tops, you'll see that on an angle that it's taking right now, it's around 71, 71 and a quarter, something like that, a little bit over 7,100.
Yeah. Now, using Avi was kind of looking for the same thing in that
Yep.
the 65.50, if it held, you were going to bounce. But was his neighborhood of resistance going to be, much higher, or was he in that 71, 7,200 high point and
Yeah,
then maybe
no,
go back
he's in
down
the
again?
same, last I heard, he's in the same range of 71, 20, 50 range, something like that.
Okay. Okay. And like I said, that's not very far from here. And you've got a reset in November where all that stock was sold, 6% down in the S&P, but more importantly, reversion to the mean in Teradyne, reversion to the mean in SanDisk, reversion to the mean or reversion for CoreWeave and Palantir. So you had a significant resetting of price, and maybe people got out again, and now to get their bogey for the end of the year, they may have to chase to get back in. Is that possible?
Yeah, there could definitely be a short squeeze that causes this to run 300 points, no question. But
Yeah, yeah,
you got to be careful up here. This is a dangerous time and a dangerous, not only time on the charts, but a dangerous time of year.
yeah,
However, when I say dangerous time of year, I'm talking about between now and January 8th. I give you that number because you won't believe how many times the market has topped between January 8th and 12th after a big run. So I'm thinking this takes its time, backs and fills, does a 5-wave advance with a couple pullbacks, and eventually around the end of the year, beginning of January, we have a more important top. We'll see. But again, you know what? I always tell everybody in my room, trade what you see, not what you think.
oh, exactly, exactly.
Right?
And
Never anticipate.
but you saw the 65.50, and then when you saw it bounce off, you act. You know what I mean? So it's good to have some parameters that you're kind of looking for. You're not going to be enslaved to them, but it's going to be an indicator for you.
Absolutely, but you got to be prepared in this market. I tell everybody this is the time to absolute make sure that everything you own you have a stop on at a
Yeah.
sensible level. Yeah. And so
And look at that RSI, Harry. That RSI is lagging. So, wouldn't it be a shocker if we blew out 6550 and ended up at 6200 like we did in 2018?
that would not shock me at all. You're right. There are some negative divergence appearing. This move off the low, even on TC2000, which I follow the money stream and balance of power. The balance of power is doing the same thing as RSI because it's similar index. ADX, they're all the same. They're all showing that the bounce off the low, as good as it looks price wise, did not look as good. Underlying the underpinnings of the market aren't. This is not a strong rally. Let's put it that way. So a pullback retest would be in order. And if you look at the ultra short time, the short term thing, which you have up there, if we
Yeah.
roll over from here, you have a
Yeah.
rounding top or head and shoulders that if we take out 65.50 this time, you're right, we're heading to at least 63, and maybe we could get even down to the 6,000 or something like that.
Because you were suspicious of you were clear about the 6550 neighborhood, but you were suspicious that if the rally was not with strong legs, meaning the RSI and things like that are lagging, that you
Yeah.
would be suspicious on something around the highs even.
And this might be an opportunity. I was telling everybody, you don't stand in front of a runaway freight train. But if the market rolls over from this level right here today and doesn't
Yeah.
go any further, then
Right.
we could really get smacked hard.
Yeah.
It wouldn't
Yeah.
it wouldn't surprise me if we did a real fast test between 66.50 and 65.50 in that zone.
And then you know what people will be saying, Harry? They'll be saying, we should have seen this coming. These people all had great earnings and their stocks were sold off right after their great earnings. That is like textbook 101 party over, isn't it?
Yeah. And this is exactly why I do technical analysis and not fundamental work.
Yeah. 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 All right, Alaina, we're switching over to you. You had some
Yeah.
pretty decent day moves today. I mean, you had a nice one in the morning going up from 6,800 and change up to 6,855 and then back down to the 6,825. So there was some action for you today if you were day trading, don't you think?
Yeah. And even like in the futures market overnight, we saw some nice moves. And there's like, I really agree with what everyone was saying earlier. I think one, the Fed is going to be a huge part of this, like what the Fed decides to do.
Mhm.
If for any reason we don't get a rate cut, I do think that's kind of been priced in. But I don't know. We'll see if there's like a surprise, if there's anything that goes off from what everyone's expecting. And then honestly, just the rest of this data, like the economic data catching up with that, that's really what I've been waiting to see, just to get a better idea of like where we're at on the macro side.
Are
But
you
yeah,
looking for the
no,
jobs report on the 16th for November?
yeah,
Yeah.
yeah, jobs report, and then the GDP, I think we didn't get that either. So there's just a lot of things that was like we're just missing a lot of puzzle pieces going into
Yeah.
the Fed next week. So but I do think the appetite right now, like retail, the appetite is insane for risk. And it's like all these dips are getting bought up like immediately. So it's almost like I don't know, it's hard to it's not I don't want to say it's like sorry, you guys, I've had a lot of caffeine today. But these dips, it's just like they're so aggressive when they come back in. So
Mhm.
I like it. I like the volatility.
Yeah. Yeah, it's going to be pretty interesting to see because it definitely looks like you have to cut because when it says 97% in the futures market, the
Yeah,
Fed doesn't want to fight that. But if they come out and say we're giving you a quarter and take a picture of it, you're not getting another one for a long time. Then
yeah.
that's gonna be what they call a hawkish cut, and that would be not 100% well received, maybe, huh?
Yeah, and I think if I'm not mistaken, the PPI report, I know it was a late report, but it had a little bit of I thought it accelerated a hair, just a hair, but I might need to
Yeah,
look back at that. But that's not a good sign. You don't really want to cut into inflation.
yeah, and the manufacturing is an offsetting penalty because that's at 48.2, which is way under the 50 number. So
Hmm.
they've got something to hang their hat on if they want to put it in there. Michael, you want to do a little wave count? Share the screen, see what's going on.
Sure, sure. Give me 1 second.
Throw a little Fibonacci pizza in there too.
Ah, Fibonacci pizza. There you go. Okay. Well, that's the NASDAQ that you don't need to see. So let me go over here. We're going to look at the SPX, right?
Sure, sure.
My
Okay.
favorite.
Let me put it out of my
Wow, it looks like a reverse head and shoulders sitting up there, doesn't
sort of.
it? Yeah.
Um,
No, not a reverse, a regular one.
I mean, a regular one. No,
Yeah.
I thought
Yeah.
okay. Yeah, okay.
and so
Break
I'm
break
actually
that
going to go out
neckline.
to here. And this shows actually from 2022. So it shows the whole rally that we're kind of existing in. I think we are in the final stages of this rally. And so on an LUA basis, things move in the way of the trend. They move in an impulse wave, and it's 5 waves. And so we are in a rally that is so the 5 waves are impulse waves are up. So waves 1, 3, and 5 are moving up in the direction of the trend, and 2 and 4 correct. And then when that's done, the market corrects in 3, coming back down in the counter trend. And we continue to do that until we're finished with all the way up to um, our largest count. Right now, this one you can see this is my maximum monthly. So this data goes back to 1925, I believe it is, 27. And so these they count. These are the grand supercycle, and cycle degree. It is the cycle degree third wave that I think we're finishing. I have other people, particularly like Elliott Wave International, they disagree with me on my count, but the one thing we do agree on is what's finishing up here. And so they have it marked as the third wave, but I think they're marking it either this grand supercycle or the supercycle. I'm marking it cycle degree. So I think what we're putting the high in is been 76 years in the making. So this is 1949. So wave 3 is from then up until now. But I think what's most more important that people really need to understand, to go kind of off topic slightly, is this is the history. This is deflation. This is stagflation. This is inflation. This is bailing out and low interest rates. After the great financial collapse, our history, our economic history, and other things that have affected the market are all here in front of us. And so I think that the biggest change that's happened since 2009 and then now is accelerated off of 2022 is algorithms, is electronic trading. And so I know that we talk about a lot of different things, but when we really consider and look at it right now, I don't think that any of it anymore is really what is propelling or not propelling the market. I do think, though, that options trade. There are options that trades on everything, and there's nobody better to speak about that than yourself, Jim. So, in my view, we're in the last 5. This is minor wave 5. And so minor wave 5, once it's done, is going to finish. Minor wave 5, intermediate wave 5, primary wave 5, and cycle wave 3. So I can come up from there. And inside here, so this is April the 7th, by the way, this low. So from April the 7th, we've gone, pretty full circle, and we're getting ready to finish everything. So I have inside of this 5th, another 5, but of minute degree, and there's 1, 2, 3, and 4. This was the 21st of November. So you can see if we're in that minute wave 5 going up, we are getting very, very close to being done with all of this. And once again, here we are now. This is the final 5th. So this is minute wave 5 coming up. It's going to have 5 waves of this minuet degree. And if I'm probably going to put it in today, that we got the 3, the 4, the 5, and I'm going to put this 3 here, and this is a 4. Or I'll put the 3 up, and this is all working in to be the 4, and that's probably going to be more like it. And which puts us that we have 1 more up. It's a little bit clearer if I go over into the ES, because that's the one I trade during the day. And so everything kind of comes in. So yeah. Same chart. We're just up in this hour. And then here we have it. This was a very complex, small 4th wave, but that's what took us down. And the other thing that truly is in control of the market and does dictate direction, and it did it twice today, is the actual. They're not Greeks. They are Greeks in a way, because they're like the volatility trigger, the call wall, the put wall. Where are these large gamma positions sitting? And so when particularly a market breaks above or below a volatility trigger, it is what it suggests. It triggers volatility. But does it trigger positively or does it trigger negatively? If we're breaking that volatility trigger on the way up, as we did here, well, then this is what carries through. We broke the volatility trigger here, and let me bring it down again so you not get a little bit of a view. We broke it here because it was stuck in here, and so the initial moves were for the market to actually, where are we? Monday.
Is this like a weekly? Is this a 5-day chart or
It's
what
a
is it?
15-minute chart.
Okay.
And I'm just kind of going into today. That's 4:30. This, and here we were. This was the opening. We had broken below it. And so there's the opening for me right there. And so we kind of we broke below it. We went back above it. We broke back below it. And then they said, nope, that was enough. So they kind of, in my view, they went on a couple of stop runs.
Yeah.
To go weed out something else. And then once that was over and they had settled how they wanted to come in this morning, and then they just went back to what they were doing until the end of the day. And at the end of the day, they just brought it back down again.
Yeah. That
So
6,800 number on the futures, what do you think? That 6,800 number on the futures is kind of a big number to try to stay above 6790,
it can be, but
6790.
the real marker for me, it'll get shifted around, but coming in, it was 6750. Below 6750 would have tossed everything back over into a negative atmosphere. And what I mean by that is just that where the dealers are, it's the risk off trade versus the risk on trade.
So if we went to the 1-year graph and you were going to set some parameters, let's take a look and see if we can set up some parameters, like, in other words, upside target potentials and then downside risk if it breaks, that kind of thing.
Yeah, sure. I have that. Right now, it's basically a lot of upside, because once it's done, then it's just there will be full of downside. This one actually doesn't exist anymore. So let me take that off. Well, I can leave it there. Oops, sorry. Come on. Yeah, I want to leave. Go away. Thank you. So in essence, I think that, well, is the potential there for the market to get up to 76? It is, but we're running out of time. I think a lot of us are in agreement saying, well, we don't have so long. I think there's a couple of cycles, and I also think that my own AI has been for months. It has not really moved away from that we top between December 10th and the 15th. 10th, we all know it's the Fed and it's Fed decision. And I think that, yes, those major occurrences, they do have an effect on the market. But if we've noticed, it's just doesn't really go very far. It's momentary. It just kind of happens. And then they go, okay, fine. And we resume what we're doing. Similar to today. I had more people come to me that subscribe to my work. They kind of came in and they were, it's, the world's going to fall apart. I'm like, why? Well, we got crypto going down. We got this happening, that happened. And then somebody else sent me something that there was a problem again with the Japanese bond. And so
well, there's a fear of rates going up in Japan. That's why they said the crypto was getting sold off. But I mean, that crypto sold off a little bit more than just a little.
Yeah.
It did, but to me, I don't know. I don't look at it and to go, I'm going to derive from that what's going to happen to equities. A lot of people still want to make all this connection. And I think, well, it could be because there's so many people with their money here in crypto, and if they're getting the money handed to them, they may be taking it out and putting it somewhere else for all I know. But in any case, I do see that today that the market didn't flip and go back down and didn't go below 6750. In fact, it held its ground. It went back above the volatility trigger that reinstitutes the risk on trade, which is the whole reason the market flew higher last week, was all risk on. And now we're dealing with that. And that can carry the market, in my view. I believe, well, at least we are going to look at 7,000 in the ES and 7,000 in the SPX. So that's more important.
So
And
5% run from 6,800, let's just do round math, is 300 points. That takes you to about 7,100. And a 10% would take you up into the cheap seats up there at the 7,500 neighborhood, right?
yeah, and but I have there's fibs that can take it up there. And that
Yeah.
doesn't mean that that's where the market is going to go. It is just
No, but I
suggest.
mean that's the kind of percentage you would have to go, and
Oh yeah.
5% is not off the table when you have everything that got sold off in November. And if you had an event or any feeling where people have got to get reinvested before the end of the year, and that word gets out, the next thing you know, everybody who's a market maker, he's going to raise the darn thing 5% minimum, if not 10, if he sees 9 trillion shares coming in at him.
Well,
You
yeah.
know? And you've been on the
Yeah.
floor before. You know exactly what the guys do when they get volume that they can't handle. They raise or drop the prices. You know
Well,
what
to
I mean?
be honest with you, that it's been a long time since I've seen anybody with under volume that they can't handle.
Yeah.
But just because of the way things trade now. But that's a good point. I think the other thing is that we had low volume pretty much all last week, and it
That's
is.
it.
And
Yeah.
what gets thin, it's like, if you're the dealer, you have to make the market. So you're going to sell one, you're going to sell 100 or whatever the situation is, and then it goes up. And so if somebody's coming in with size, you're right, they're going to be paying up for it. And conversely, if they're gonna have to sell, if it goes the other direction, they're not just going to stand there and buy it all back in. It's
No.
called everybody's going to make money. But I do think that the market is going to get above 7,000 before all is said and done. But I think then it is a longer term or more major top. I think it's a cycle degree. We go through a cycle degree fourth wave. If it took us 76 years to get up here, how long do you think it'll take us to put in the correction? Which, by the way, will bring us back to these levels, 2009. And that won't be a year, it won't be 2 years, it won't be 3 years, it won't be 5 years, it will be more like 6 to 12 years.
And
For
there'll have to be obviously a big shift on something economically. Could be real estate. I mean, the darn thing can't get bids, and it's gone up 100%. So why couldn't it go down 61% from where it is? Simply because the prices have just gotten out of control. But it had to be some event that would make it go that way. Those kind of really substantial drops that are mentioned with Elliott Wave seem to have some type of an event like COVID or a great financial crisis or something a little bit more significant than we didn't get a rate cut. You know what I mean?
That's true, but
Yeah.
if you think about it, there are enough situations brewing on a global basis, but also brewing within our own country, which could throw the market off its axis.
Oh yeah. Yeah, yeah. But it would take something. It would take something. You know what I mean? Like COVID was something.
How
Great
about
financial
how about
crisis. Yeah.
Jim? How about a collapse in Bitcoin?
Yeah, I mean, would that shock? I mean, if it breaks underneath 70 grand, I mean, there's nothing holding it. So you
That's
got
right.
70, 80 is a basic area where it's got to stop, and it has. And if it doesn't do that, and you started seeing a 59 print, and this guy Chanos is no dummy. He thinks that these people that are financing all of this stuff, like CoreWeave and Circle or whoever they are, Elsar or Nebius, they don't have any profits, and so they're issuing a lot of debt without profits. And some people think that they're issuing debt that won't be able to be supported if things change, because the expense of the data center, the expense of the electricity they don't even have, the expense of getting labor who could actually work these things. These are real big unknowns. So yeah,
Yeah.
Harry's right. There could be either the Bitcoin thing or this total bet pot on AI could
That's
could
how I
come
feel
up and
about Oracle.
yeah. Well, Oracle's a classic example of once they announced that they were going to use financing as opposed to their own cash. People viewed that, I think, as, hey, these guys have lost confidence in this thing because now they don't want to use their own cash. They want to use
Yeah.
borrowed money. And when people hear I want to use borrowed money rather than my own money, that doesn't make them more confident. So ever since which was in October, they announced this $38 billion deal. I think people have lost confidence in the data center deal because there is a lot of wild cards there. It's no slam dunk. And
Yeah.
OpenAI and CoreWeave are two examples of companies that are not making any money that are signing up for a lot of expenses. So it'll be interesting. But it's
If
always
they're,
something,
if
right,
they're
Harry? After
used,
70 odd years, it's always something.
If
Yeah,
they
you're not
use their,
kidding.
if
And
they use
no,
their own AI, they are making a ton of money.
Well, I
AI
don't
right
know.
now in trading is
Uh-huh.
blowing the doors off.
Hmm.
Literally blowing the door. I don't know how to explain it, but it is blowing the doors off. And so that when we're trying to decide what could really tear a market down, what could reinstitute something totally different? Well, artificial intelligence is staring us in the face. And whether we like it or not, it is happening. And whether we like it or not, it is replacing human beings. We've had this discussion before. I think that
Oh,
is
there's
what.
no question. There's no question it is. It's just, I always wonder if people are unsuccessful with AI, would they stick with it since they don't stick with people who they're not successful with? So I
Yeah,
think, I think that, in other words, if you lost all your life saving to a black box, you might be upset and may not follow it anymore. You know what I mean?
yeah, I do. I do know.
So,
I
but
also
Harry,
think
what,
that
mhm,
one last thing. I think that
yeah.
what we as traders and what the markets as institutions really need to be careful about is it's like we have these indexes, right? And they're all like cap weighted, except for the Dow being price weighted. So the cap weighted stocks, what happens if AI, and let's drill in on NVIDIA, AMD, or let's just call it NVIDIA.
Well, that is a risk. That is a
Well,
risk
not
because
only
you've
a
seen
risk,
you've seen you've
when
seen
does
chips go yeah
do we
you've seen
think
chips go nuts and once you don't need their chip or they don't want to buy their chip or they don't think they're getting a rate of return on their chips they stop buying them
no, it's not
and when
even
you're
going to be that, Jim. I think
you
it's
know
going to be that they will be the market. So is it going to be the S&P 100 S&P 1, or the Dow 1, or the Nasdaq 1? So we have one stock right now. When we look at it, when you look at how what percentage the moves in Nvidia give to the Nasdaq or give to the
oh,
Dow.
a tremendous amount.
It's huge.
Yeah,
It's
but that,
huge.
like I say, that also used to be called GE at 2000 and that didn't work out so well. So
yeah,
you mean
but Jim,
yeah.
I want to point
Yeah.
out this market had a strong rally without Nvidia. Period. Look what
That's
the
it.
big
It's broadening out. It's broadening out. Yeah, you can just see that from the percentage of
right.
stocks above their 200-day moving average has jumped back above 50 from under
Yeah,
50. So
Nvidia dropped 50 points what during this whole rally.
yeah,
Look at it. The chart, it went from 210 to 160 something. Yeah, okay,
yeah.
so and while the market was rallying, so the market doesn't depend on Nvidia, but it wouldn't hurt if it can't went along with the party, right?
No, and it wouldn't help if it dropped another 25% for some reason.
On the other hand, take a look at Apple. Apple's leading the way right now. Seriously, look at this
Beautiful.
chart.
Yeah. Yeah.
All-time highs, right?
I
Yeah.
love Apple. They're my
Yeah.
favorite stock, and I love how they navigated this AI thing. Like I feel like they played defense the whole time, and I didn't even realize it at first, but they don't have all the exposure that all these other companies do, or this CapEx.
And
No,
even
it
even with
seemed
Jim, even with the pullback, look at Google. Even with the last couple of days, it's been powerhouse. It's gone from 144 to 328 since April.
yeah.
Power all-time highs. So
Yeah.
I watch those two stocks right now because when they turn down, the market's going to get hammered.
Yeah. And they're extended. They're extended,
Oh,
but you know
oh
what?
yeah, no question.
They can stay extended, but there's no question they're extended. So in other words, if there was some kind of reversion to the mean, you could, from what I see right here, you could go down to 280 on Google just to go back down to the 36 moving average. You know what I mean? So, but Harry, what kind of stocks are you looking at lately on your board that you seem to be getting some activity on? I noticed the biotechs and the healthcare kind of rolled over a little bit in the last day or so.
Yeah, but
But
every,
the energies and the metal stocks, are you doing anything with the gold and silver stocks? Because they definitely look like they got legs.
yeah, I mean, I don't trust gold up here. I don't trust
Yeah,
silver up here, and I don't trust Bitcoin up here. That's all. So I
right,
trade. I come in every morning. I look at the chart patterns that are coming, and like
right.
Boyle was a day trade for us today. But we came in this morning, it dropped down into the 35 and a half range, three quarters, and went up to 38 plus. But we had some monster moves today. I mean, every day there's crazy stocks. Take a look at F. You're gonna love this one. The 1 minute chart on FLYE. 1 minute
F
chart.
L Y E. And
1 minute.
here you go. Oh boy, 252% in one day. Nothing wrong with that, is there?
Well, not just that, but FLYE, right?
Yeah,
Um,
it went up to 15.79, up about 11
can
bucks and
you can
change.
can you do a 1 minute chart? 3 minutes is fine. Look, you'll see the move. When this stock popped in the morning and pulled back and formed this little pullback low, and I was looking for a 5 wave Elliott wave move, which is standard for me, and it ran from about 6.5 into the low 20s. My target was 21. I think the high was 21.40. They got a little lucky on that. Everybody got out over 20 on this. And look what it's done here late in the day. Come right back again. Another 5 wave move. So look, we I don't care what this company does. I don't even look at the fundamentals. I look at it. I look at a high volume breakout. I look at flags and coils and patterns and the stocks running in a lousy market. That's where my money goes, and that's where my people's money goes. Another one is CNCK. Look at that one. Up until the last hour, it was doing great today.
Yes.
We bought the opening after it popped and consolidated, and it just stair stepped its way higher all day. I sold the stock into the 8.5, 9 range towards the end of the day before it dropped. And there was several stocks like that today. Another one, AH.
You want to put a Boyle, because that one might have a continuing story there. What are you thinking there? Because that thing looks like it's breaking out on a little bit even of a longer term basis.
Well, like I mentioned,
BOIL, BOIL,
I know
BOIL.
I mentioned it earlier that's
Yeah,
a
but
trader.
I saw the chart myself, and I thought it might be worth focusing more on. It wasn't
Well,
just a one
it
time.
can't.
It doesn't look like a one time only thing. You know what I mean?
Right. It came down from 100, over 100 into the 25 range, lost 75% of its value. But when you draw lines on the down channel, you'll see that it broke out. The moving averages crossed over, and we were long.
Yeah.
And then it pulled back and consolidated, and it looks like it's consolidating now. Is this a 1 minute chart?
Oh, yeah, it looks like a 1 month. Can we put 1 year just to give you a little bit more perspective on it? Simply because it looks like it might be turning up to make a major advance.
Yeah, you'll see the
And
bottom if you do the 1 year chart. You'll see the
one
bottom of this.
year up there.
And now, yeah, this is
Okay,
that's
yeah.
a
Can you see it's kind of got that rounded thing going?
yeah. The problem is it's a compressed chart, but take a look at all the green bars on the right side there.
Yeah.
Stocks being accumulated, and look at the unbalanced volume, the RSI all moving up.
Yeah. Yeah.
It made a new high today.
Yeah.
Multi-week, multi-month.
Looks like it wants to go to the gold line.
I agree totally. That's 45.
Yeah.
47. Yeah, and right at 37. It looks like a 10-point trade from here.
Yeah, that was a good one. Yeah. And what's going on with natural gas? Is there something going on with Ukraine and all that stuff, or is it just
I'm not sure the fundamentals.
you're looking at
I'm not sure.
technicals? Yeah.
I'm not sure the fundamentals, but I'm watching the price rise, and the Boyle is going up with it. There's another one, by the way, if you want to trade similar stock, similar ETF. There's two of them. UNG. It's called U.S. Natural Gas FD. Same chart, same kind of pattern. It's just cheaper.
Yeah, and it's also got even a bigger breakout even above the gold line.
Right. And this one, I think, is headed towards 18, 19 range for a 4 or 5 point trade. Same percentage move.
Can we just throw up two energy others, CVX on the Chevron and show Exxon, XOM? Because we know natural gas is looking good. We just proved that. But what about this Chevron? It still looks like it's hoping against hope a little bit.
I got a better chart for you. APA in the oil group.
Oh, okay. Yeah, try that one. Okay, yeah, much better. It's got legs.
Now it's right at a resistance level that if it gets through here, you're going to see 31, 33 range.
Yeah, yeah. And quickly, probably.
And then really nice rising channel and moving averages. Everything's the way I like it to be when you're in a 45-degree rising angle of ascent and you have a 1, 2, 3, 4 wave. To me, this is the fifth wave about to start that takes us up near 30, give or take a point. And so it's going to be a good swing trade from here if it breaks out.
There's earnings this week on Dollar General, DG. Can Harry take a look at that and see if he thinks there's a big breakout? Because on the 5-year graph, it's in a real big wedge, and I'm just wondering if it might have legs on it, because it's come down. If you looked at a longer-term graph, the darn thing, used to be much higher, and it came way down. But it looks like it's already kind of moved a little bit.
It has. And look at the long-term chart.
If you look at the 5-year, just as a weekly, I thought there was like a little wedge coming here, and I think there's going to be a big move up or down one way or the other.
Well,
That
this is what I call a V bottom and a right-handed extension pattern, and the key is going to be if this can get up above 116,
Yeah.
I think you'll go to 138 and 155.
See, and that's what I'm thinking. You know what I mean? And with the limited risk options, you can throw 100, $200 in there and go take a nap.
Yeah,
See
if
if
you buy the stock,
see if it happens. Yeah.
the stop is under 95 if it doesn't work.
Yeah. And yeah, and then the other one that because some of these stocks that are way out of favor, like Abercrombie and Fitch, ANF, they had huge runs after the earnings came out. You see that? That was a big option winner there.
Yeah, we
But now we
did.
got Lululemon. Is Lululemon going to do this, or is Lululemon dead in the water? LULU.
Yeah, I know it well. This is a terrible chart.
I know
Massive,
it's a terrible chart. Yeah, yeah.
a massive 5-year monster, head and shoulder or double top type pattern and a break of the neckline, and it's down to secondary support already and bouncing. To me, it's got a 1, 2, 3 wave decline. I'm looking for a wave 4 rally back to about 210, 20, 15 range to short it for a move that takes it eventually down to about 130.
Yeah. So the earnings might be decent. They pop it a little bit and then
Yep,
hit it.
yeah. And look at the underlying technicals. This stock looks terrible. The money stream balance of power have turned neutral to negative. And this rally we had today, it didn't put a blip on the chart, or not yet, not today, on Friday, or whatever that was. Yeah, it went up 20 points on Friday. I think it was earnings.
Huh?
And again, look at the overall chart. It's brutal.
Now, Alaina, I was wondering if you could do us a favor and maybe put your chart up there and discuss a little bit about how you're doing the trading a little bit, but also talk about that book you've got because it'd be a great stocking stuffer.
Oh,
And
thank you.
people who want to learn about the mental aspect of trading, I think would be well served to stuff their stocking.
All right, sorry guys, I'm on my laptop today and
Oh,
I'm
okay,
usually on my iMac. So I'm getting adjusted to the size
sure.
difference on here.
Well, like I say, the book
Um,
has a lot to do with how people's emotions come into trading and how it really can be a negative or positive, depending upon how it is, handled, and all the different things that happen mentally when you're trading.
oh yeah. So
What's the
yeah,
book name again, real quick?
it's called Trade Brain.
Trade Brain, right?
Trade Brain, yes. And I'm actually doing like a live webinar on this, a free webinar for anyone that wants to come. We're doing it December 10th. Um, so yeah, basically my trading style, I'm more of a scalper, but I do also long-term invest. So I have like my holdings and things. But um, typically my day to day, I'm looking for momentum. And I know typically, December usually starts off a little slow, but when I'm trading ES, like on the future side, it's a lot smoother of a ride than like the SPX contracts. I heard you guys talking about that earlier. But the time decay on those is just insane. So like when you don't have like a really strong push, I like to defer to the future side of things. But
Hmm.
um today, like for example, let me just jump up here. So I draw what I call like my roadmap, and you guys can see it in here. And again, since I'm short term, I'm in and out. Trades are usually just a few minutes, but I've got my trend line down through across the top here. You guys can see we've rejected it a couple of times already. And so I wasn't really planning to be bullish until we took off out of this, just because we had this nice bounce through here. But I just wanted to see how price reacted. And then also to the downside, we also have like the 50. So like even though I'm trading on lower time frames, usually I'll be on like a 2, 3, or 5 minute. Sometimes a one, I'll put like multiple time frames up just to see the momentum and the volume and things. But just like zooming out, we've kind of been going sideways for the last couple days, like in this range, and it's really kind of a tight range. I use the 50 and 200 moving averages, and you guys
Okay.
can see like they've been kind of hugging. So like this was where they kind of started to diverge. That's what I like to see
Yeah.
um, for
That's when you get a
momentum.
move. That's when you get a movement, right?
Yeah,
Yeah.
when they kind of
So
hug
where are
each
they now?
other.
Are they converging again, or where are they at basically now?
So right now in the 3 minute, yeah, they're converging, but usually um this kind of helps me with my trading like planning too. It's just like I can kind of see on the different time frames like where the moving averages are, and it can really give you a sense of like what kind of trading day you're in for. So like for example, on the 15, And this is literally just today. You saw like the buyers just trying to get their golden cross back, like just trying to get like that
Right.
50 back over.
To get
And
it
we're
back over.
still,
Yeah.
and we're still rejecting this trend line. So for now, I'm still, I'm just chilling right now because I
Oh,
want to
yeah.
see, and we double bottomed here. So like for as a bear, really and
Yeah.
truly, I'd want to see us maybe like a short trip down back to this area. But that 200 is also like a support or resistance potentially. So I want to see how price reacts to this. But yeah,
Yeah.
my favorite trades are when we have a clear, golden cross, death cross, and I like to take trades off the 50, like the bounces or the rejections down below, as well as the 200.
Yeah, that moving average, it could be a deal where they could bring it down and make a little lower low than they had today, but then be caught by that purple line.
Yeah, and they
Where's
usually,
that come in? Where does
especially
that come in? Around 67? Who?
let's see,
That
around
one, right? Yeah.
67.97, around 6,800, that psych
Yeah.
level.
Yeah.
So,
Yeah. No, that's
um,
a good level. I mean, I think if it breaks under there, something's gone wrong.
yeah, and I just can't be bearish and while we're above it either, So there's really like not too much to do right now. But they're short term, we can take our little bites and things, but
Yeah,
I
sure.
really want to
Sure.
see us break out or hopefully
Now,
not sell
are
off.
you using a lot of the 3 minute graph or
Yeah, usually when I'm trading like my actual setup, I'll have ES up on like a 5 minute. I'll have the SPX up on like a 2 minute, and then I'll have like the VIX, or sometimes I'll have DXY across the bottom. Um, but yeah, I like to see everything. Like I always tell my students I'm nosy,
huh?
and I want to see what
Yeah.
everything's doing. But yeah, I'll do SPY, SPX, and then over here, I think I actually have it already. No, I don't. This is ATR. But I'll throw the VIX up down here at the bottom of this thing so I can peep
But
that too.
you're finding the 3 minute, 5 minute a good you get some consistency out of it.
Yeah, because again, I'm not in my trades very long. Like I'm only there when we see like a build in volume, and I'm just taking bites. And so like when the price gets like weaker, I like to risk off and then just
Yeah.
reset for the next opportunity. But I don't like to hold these things, especially I think SPX kind of did that to me mentally just because the theta is so high. I just don't like to hold my positions long.
Right. Harry, when you're doing the shorter term trading, weren't you saying you use the 5 minute or was it the 2 minute or
No, actually, intraday trading, we use our 1 minute charts. I refer
okay,
to
one
five
minute,
and
yeah.
six. I refer to my 5 and 15 minute and even hourly charts just to see the overall trend going back a few weeks to see where the support and resistance might be. But from
Right.
the intraday patterns, I look at a 1 minute chart pattern. It's amazing how often we get beautiful moves like that morning. This morning, a stock out of nowhere, QTTB, a biotech, literally went vertical from 2 to 4 and change, pulled back and it formed a beautiful wedge. And when it broke out of the wedge, we bought it at 3 3/4. And 2 hours later, it was 637. It was, more than about doubled in just a couple hours. So we were very thrilled with that. And the rest of the day did nothing. But in the morning, it was a very powerful pattern.
And when you're in the room, can you walk through like how you would come up with a certain stock to focus on, and then what
Well,
would
yeah.
make yeah,
Well, in the morning, I get in really early. Believe it or not, I'm in the LA area, so I'm up at 3:30 every morning, and I'm on the site by 3:45. Between 3:45 and 5:15 for an hour and a half, I'm going through dozens of charts, lots of news. I want to see what's popping and why. I want to see the pre-market patterns because we do a lot of trading in pre-market before the market even opens. If you look at QTTB, that stock was a buy at 3 3/4, but that was at like 8 a.m. in the morning. And by the time the market opened, and then a little bit after, it was doubled. So I will put out several trades pre-market, and then when the market opens, I want to see the opening salvo, so to speak, in the first 10 or 15 minutes. I'll then
right,
I may put out 2 or 3 more day trade ideas on
right,
stocks that appear to be gapping and trending in a rising channel, 45-degree angle type moves. Uh, and then if I see anything that looks more of on an intermediate basis, but more of a 15 minute or an hourly chart that's breaking out of a range or a pattern, I may be putting out swing trades on those.
I got you. And it could be a smaller cap stock, or it could be Google, right?
Yeah, yeah. In other words, I have a rule in my room: nothing under $2. But if something's trading at, like two and a quarter. It's trading 25 million shares pre-market. We haven't even
Yeah,
opened yet.
that's a
That
big
kind
deal.
of activity, those kind of stocks usually end up trading 100 million shares before the day's over. And so there's a lot of activity and a lot of liquidity, and you can get in and out of 10, 20,000 shares at $3 or $4 a share. And I did that this morning. I took a trade, 10,000 shares of the stock at 3 3/4 and wrote it to 5 1/4. And that's a $15,000 trade. And so
Is volume something you're definitely scanning for?
absolutely. I
Because you love
caught
volume. Yeah.
many years ago, I coined the phrase the price volume surge. It's got to be a combination. Price without volume and volume without price to me is meaningless. If they have both and they're coming out of a trading range or a base, that's where you get a maximum type potential day trade. In the case of this stock, for example, it was going nowhere on a daily basis, and suddenly, boom, it broke through a double top out of a base that took more than a year to develop, and it went vertical. 214 million shares today.
Mm-hmm. And you're not the only author of the ideas, because you've got many people in the room. People are there voluntarily to give
That's
their own
true. I have,
ideas.
in particular, I have several traders that have been with me 5, 10 years that know exactly my style. I know their style. And when they come up with an idea that I haven't seen for whatever reason, or during the trading day when I'm busy looking at other charts or busy answering questions or doing whatever I'm doing, they'll private message me saying, take a look at XYZ. And if it's something I think is tradable and or appropriate for the room, I'll put it out there as a day trade.
Yeah. Yeah, like I have people who bring me option ideas from other vendors, and basically I look at them, and obviously sometimes they are great ideas, and sometimes they need to be tweaked or abandoned.
Yeah, no, totally agree with that. And so that's why when they give me ideas, I have to go through them and give them the thumbs up or down on it.
Sure, that makes sense. Well, Harry, do you want to go into a little bit right now? Do it at a leisurely pace on how people can, go over to your place and how you can help them.
Well, yeah, my site is thetechtrader.com, and if you go to it, let me put up the link. Can I share it?
Yeah, sure.
Where is the share up? There it is. Share
Down the bottom. Yep.
I see it. Yeah. Hold on a sec. Just a second. Oh, there it is. Okay. Share. All right. You should see my screen right now.
Sure. We're getting there. There you go. We see it. We got you.
Is there anything blocking it?
Nope.
Okay.
Perfect. Perfect picture and perfect text right there.
Yeah. So, I'm a believer that people that don't know where to enter a stock, when to exit. When I give you day trades, I tell you what the targets are, where the stops are. And I do nonstop, constant updates via live videos. I do a live webinar every day. And the webinar stays up all day, but I may be off of it. And I'll come back on and do an update. And I'll discuss the patterns as they're developing and showing people what I'm seeing and why I like it, why something may be breaking down and or stopped out already. So people are completely updated in my room, nonstop all day. People tell me I'm the hardest worker on the internet, and but I like it. I get up early in the morning and I work all day, and even the after hours I'm doing a charts of the day video, and then the weekends I do a weekend webinar. So I put out. There's a lot of effort put into this, and I put out a lot of content. And there's like something like 110,000 pages on the internet. I've been told on my work over the last 20 years or so. But I've been doing this for a long time. My birthday's next week. I'm going to be 79, folks. You believe that one?
Yeah.
I can't even believe it when I wake up every morning. Heck, where'd the last 50 years go, right? But if you click on the bottom, you'll see that says join for free, or go to the left side, start a free 10-day trial. No credit cards. Just come on into the room for 10 days, and you can see exactly what we do, and even make a lot of money. People have told me they've made enough money in the free trial to pay for a year or two subscription. So come join us and see what we're all about. I think you'll have a lot of fun, because it's a fun place too. There are nobody in my room has an ego or is sarcastic or obnoxious, because when I see that kind of person, I usually ask them to leave, because I have a philosophy: when one of the spokes in a wheel is bent, and the wheel wobbles. I don't want anybody being uncomfortable in my room. So therefore, I try to make it a fun, comfortable place, but also a place you can make money, and more importantly, I was told that 2 months in my room is like 2 years in the classroom. That you learn a lot about technical analysis, technical timing, and I have a lot of people who told me that who've been with me for years that they. And I also have a book called Profitable Day in Swing Trading. But people have told me that just being with me for a couple of months, 2 or 3 months, they've learned so much about technical trading that they never knew before. And so I urge everyone to come on in and check us out for a while and see what we're all about.
Yeah, cut that learning curve way down. That's not a bad
Yeah,
idea.
I mean, like I used to tell everybody, I was a 25-year overnight success.
Yeah, yeah. Well, there's a lot of day trading and a lot of swing trading going on, so there's a lot of people who could use help. There's no doubt about it.
Yeah, no
You know,
question.
so there's a good step. Um, Alaina, again, explain how people can get a hold of you. And again, you got that seminar coming up December 10th with the book and everything. So let's be clear on how they can
Yeah.
do that. Yeah.
So the site, it's everything Investing Bay, Investing BAE on all platforms. The webinar is, I'm just really passionate about trading psychology. Like I've seen people make a lot of money and just not have the mental capacity to keep it. And so that's kind of like, that's the hill I choose to die on right now is just helping traders understand themselves so they can keep the money they make. But yeah, it's a free webinar. It's open to anyone. And yeah, I hope you guys can make it. I'm excited. It's the
Yeah, it
first
should
book
be.
event.
Yeah, it should definitely be great. Michael had to go offline for a personal situation he had to handle right away. So David's going to be putting up his information here, and you should definitely write it down and let him explain how he helps people with his approach to the day trading. And basically, he obviously has been a floor trader before, and he has his own analysis through, the Elliott wave as he was talking about. So that could be pretty helpful to some people as well. So if you see the information on the screen, write it down and send him an email or go to his website and then check it out. As far as Option Professor is concerned, tomorrow we have our live webinar called Lunch and Learn. And so if you'd like to go to that, my email is optionprofessor@gmail.com. And we're going to be covering Bitcoin. We're going to be covering where I think it might be going by the end of January. We're thinking about energy because as Harry was talking about, oil is something that was moving today in the energy market, and these other energy like Apache that Harry was talking about looks pretty good as well. And we're going to try to get an idea of what this S&P might do between now and the end of the year, because there could be quite a significant amount of exciting stuff. A lot of big name stocks have had big corrections, so it's nice to look at things when they've reverted to the mean. And in the month of November, there's been a whole bunch of stocks that reverted to the mean and left a lot of people holding the bag. But if you weren't left holding the bag, this is called opportunity knocking. So the webinar tomorrow is Lunch and Learn, and you can email me and I'll get you the link, optionprofessor@gmail.com. All right. Well, we're getting close to the top of the hour here. Does anybody have anything else you want to add? Or do you think I think we've covered it pretty good?
I just wanted to tell Harry happy early birthday.
Of
Thank you.
course.
Yeah.
You're welcome.
Are you going to go to Rudy's down there in Cliffside to have a nice dinner, or what are you going to do there? Was Rudy's in Cliffside when you were growing up, or no?
Cliffside, what?
Cliffside Park
In New Jersey?
in New Jersey, a place called Rudy's. It's been there for like
Nah,
60
I never
years.
been. I never been to Rudy's. Don't forget, I left New Jersey in 1979, a long time ago.
Oh, a long time ago. I got you.
Yeah.
All right. Well, anyway, have a great birthday, Harry, and
Thank you.
yeah, good luck with that webinar, and let's get some people getting that book for you, Alaina.
Thank
And
you.
yeah, thank you very much, both of you guys, for being here. We'll do it again soon, and good luck and good trading. I'll send it back over to David now. Hello, David.
Yeah. Oh, sorry. Can you hear me now?
I can hear you now.
Okay.
Okay.
Yeah, I messed up my mute buttons.
Hey,
Um,
it's first day back, right?
yeah. Um, all right. Yeah. All right. Thanks, everyone. Great discussion. So, just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube, Substack, or your favorite podcast app. And also, if you come to TimingResearch.com, this post at the top of the page will become the archive for today as soon as I can get it processed. Also, be sure to put on your calendar. Our next big Analyze Your Trade event is December 18th. And if you have never been to one of those, that's where it's half-hour sessions. I have 12 to 16 educators throughout the day, and no presentations, no set agenda, just everyone just looks at the symbols that you want them to analyze live, real time throughout the day. So mark your calendar, December 18th for the next Analyze Your Trade. And just want to thank my guests again for today. Harry Boxer of thetechtrader.com, Alaina Nicole of investingbay.com, Michael Filighera of logicalsignals.com, and the option professor, Jim of optionprofessor.com. Thanks, everyone.
Thanks,
Thank
David.
you.